Good day, everybody. It's Guy here, the unknown, and today I want us to look at something very important. I want us to look at the most easiest trading strategies you'll ever find, and it's called the most explosive trading strategy for indices. And this is a strategy that allows us to trade moves that are ready to explode. We are not willing to sit on our charts and wait for moves that are going nowhere. No, we are taking trades that are ready to explode. Immediately when you enter, you expect the trade to explode in your direction. If you are wrong, you expect it to close you immediately. Okay, so that's what we are looking for. So guys, with this strategy, we have four criteria. Okay, the first criteria is to identify trade volume before the session. The second criteria is to wait for the session open 9:30 US time. Okay, and if you're in South Africa, it's 15:30. That's when the US session opens. Okay, if there is news during the session, we wait for the news to trade. We do not want to be getting in before the news because you can't predict results from news. I've had people saying they are good, they know where news are gonna go, blah blah blah. But the truth is, most news are actually carried out in the form of a survey. You can't predict what people are gonna respond. Okay, so we wait for the news. Okay, and then once the news have traded, or if there are no news, once the session is open, we want to see a chart pattern. And I always say 90% of my trades are based on triangles. Yes, there are people who say patterns don't work, but I use patterns every single day, and 90% of my executions are on triangles. Okay, and then once we have a chart pattern, we want to see an evidence candle. An evidence candle is a breakout candle, okay, which is not just any candle. It's the big candle that breaks out of the pattern, okay, and at the right time. So we are not just looking for any breakout candle. We are looking for a breakout candle at the right time, and not just any breakout candle at the right time, the big breakout candle at the right time. Hence I call it evidence. We want to be sure that they are exploding. Okay, that's why I say we trade moves that are ready to explode, and then that's when we execute. And our maximum stop loss is 25 pips. Our minimum target is 50 pips. Market condition will tell you how much to target, because some days you'll be able to target 300, some days 400. Indices move heavily. And for those who are scared of indices, don't worry. I'm going to show you a strategy that works for currencies in this video. So stay along, okay? So guys, when I say at the right time, I know some people might be confused. So I told you this is a watch, okay? This is o'clock, this is half past. I am looking for evidence candle. You see, this is a pattern, and the big candle that breaks out. This candle must be the biggest from this point here all the way to where it breaks out. It must be the biggest candle, okay? From the point where it touches here all the way to where it breaks out, it must be the biggest candle. I repeat, it must be the biggest candle. I'm not talking in terms of pip. No, in terms of size, it must be the biggest candle from the last touch on the pattern to where it breaks out. And this candle must happen at the right time. Remember, I'm using a 1 minute chart here. Okay, I'm using a 1 minute chart. So this candle must happen from 20 past all the way to 22. If it happens later than this, I'm not going to take it, okay? I'm willing to take it if it happens from 20 past to 22, or from 10 to 10 past. These are the times at which I'm willing to take it. But the main goal here is it must be as close as possible to the hour mark, or as close as possible to the half hour mark. If it happens, you see this one, I've actually colored it with green. That's because these are acceptable times. However, there are this one colored with gray. These are golden times. If the evidence candle, this candle here, is given at any time from 25 past to 35 minutes to, this is gonna be a very, very great one. And these are the ones I love. These are the ones I love because these are my golden times. If it happens exactly at 30, wow, that's a great one. Okay, again here, if it happens between 55 to 5 past, it's within the golden times. Remember, the goal is to take evidence candles that happen as close as possible to the half hour mark or the o'clock mark. Okay, Yes, I will take it if it happens maybe 21, 22, 23. Why? Because if you get a clean pattern and they break out at 21 pause, the other opportunity you might get is if they retest, of which most of the time they might not do that. Okay, so that's why I will take it. I hope you all understand up to this point. So we are going to the charts because I don't want to waste your time. I told you this is how I look at my indices each and every day. I open them like this, as you see on the screen. Okay, and this is a 1 minute chart, this is a 1 minute chart, and this is a 1 minute chart. When I open them like this, I'm actually able to do what? To see them at the same time. Okay, and let's go to the first criteria on the Nasdaq. Okay, the first criteria actually is to see who's trapped. They send people down, down, down. Okay, and the session opened in the middle. So if the session opens in the middle, you won't be able to see who is trapped. Guys, for those who are new, to understand this, please watch my recent video. I'll put it in the description. That's where I explained this strategy thoroughly. Okay, thoroughly. And for those who have the playbook, which is in the description, you can, everything is outlined there. I've summarized this as much as I could. Okay, and I'm busy updating it for some of the other things. Okay, so look at this, guys. Look at this. Look at this. I'm looking at all these things at the same time. As you can see, I can't tell who is trapped. Okay, I can't tell who is trapped because they didn't really send people up. They just went down, down, down. Okay, and most of the time they trap on the closing price. So yesterday they didn't do that. Okay, so when the session opened, we come 5 to 10 minutes before the session opens. You already know that. So we are gonna come here and start analyzing. Okay, start identifying trap volume before the session. Okay, so yesterday it wasn't there. Okay, in my recent video I explained all these things. Okay, it wasn't there, so I told you can proceed even though this one has not been met, because sometimes you won't be able to identify this one. However, we do not do anything up until these other criteria are met. So now we're gonna go and identify and actually see, did we have news? Yesterday we had news, right? Yes, yesterday we had news. Okay, we had news. Let's go to the economic calendar. Okay, yesterday we had news at 10 a.m. US time, 4 p.m. South African time. So we don't do anything up until the news have done what? Up until the news have traded. So now we are going to identify the candle of the news. Okay, the candle of the news. Okay, so as you can see, this is wait a minute. Yes, this is the news candle, right? This is the news candle. Wait a minute. Okay, yes, this is the news candle. So okay, the news were not that much explosive. Yes, the news were not that much explosive. We had news yesterday. Let's see the candle. Sorry. Yes, this was where the news were actually at. Okay, so we do nothing up until the news have completed. So by this time here, the news had completed. So we go to our next step. What's our next step? Our next step is, now we identify a chart pattern. Okay, I told you 90% of my executions are based on a triangle. Okay, it could be an asymmetrical, it could be a right angle, it could be, yes, mostly these two actually. Okay, so now we're gonna identify a pattern. You can see they go up, they go down, they go up, they go down. Okay, they go up, they go down, they go up, they go down. Okay, we are trying to identify a chart pattern. We are trying to identify what? A chart pattern. Okay, guys, let's see here. How do you identify a chart pattern? You find points where they touch multiple times. You find points where they touch multiple times. Okay, I want to show you something. Okay, maybe for some they saw this as a pattern. Yes, because remember, people can see different patterns, which is not wrong. Okay, maybe someone saw this as a triangle, not perfect because it cut some points out. So obviously you can see that this wasn't a perfect pattern. Or let's say somebody saw a rectangle here. I want to show you something that is important. Okay, let's say somebody saw a rectangle here. If you watch my recent video, I did explain that we need at least a pattern with 3 touches up and 3 touches down. Okay, sorry, let me bring something in here. I just want to bring the rectangle quite quick. Okay, I just want to bring a rectangle. Okay, there's a lot of things we're gonna do together, guys. There's a lot of things we're gonna do together in this video. Okay, so okay, we want to see, we had a touch down, yes, and then let's go, we had a touch up, yes, and then let's go, we had a touch down again, yes, we had a touch up, okay, we had a touch up, and then we had a touch down. So yes, this one had 3 touches because we had another touch here. Okay, we had another touch. Let's look at this touch. Did we get the biggest candle that broke out of the pattern? Possibly no, we didn't get it, right? We didn't get it. Okay, let's say somebody maybe put his touch here, because here we have like the body. I usually use the bodies. Okay, so and we have wicks here and we have wicks here, which still forms part of the pattern, right? Yes, they still form part of the pattern. So let's see, and we had a very big breakout candle here. Could this be the trade? Okay, we have to ask ourselves one question. What time is it? What time is it? This candle, is it the biggest from this point to this point here? Possibly yes, it is a big candle, as you can see. It's around 20 pips. Okay, but let's look at something very important. What time was this candle? See down here, this candle was at my broker's behind in 2 hours, so it's gonna say 1540. So this was 1740. You see, the times are off. It's 40. Let's go back to where we were actually explaining the times. Okay, if you look, it happened somewhere here. Okay, that was actually after this times here. Okay, so again, this wasn't a proper time for me. Okay, it wasn't a proper time for me. Okay, it wasn't a proper time for me. So yes, they did give a breakout candle at 40. Let's see. Yes, it is at 40. So this was not the best timings for me, because I wanted as close as possible to the half-hour mark, or as close as possible to the hourly mark. Okay, so yes, if you saw this pattern, you understand why I didn't take it. Okay, because sometimes you see a pattern and you think, oh, but this was perfect, this was perfect. It's all about the times as well. Okay, all criteria must be fully met. And then yes, they built a pattern here. Okay, I told you 90% are triangles. Okay, even if you watch my recent videos, I've been explaining this a lot. Okay, I've been explaining this. Okay, even here you can see there is no pattern, and then you can see here, they go up, they go down, they do this. This resembles a head and shoulder. Okay, unfortunately for me, I don't like head and shoulders that are inside here, because you can see this pattern is still inside here. A head and shoulder for me must be at the extremes. It either must be at the high or at the low. So this wasn't a clean head and shoulder for me. Again, if you look at S&P, okay, it gave something again like a, okay, you see, they gave an inverted triangle. Okay, they gave an inverted triangle. Yes, I want to show you this thing. So we are looking at them at the same time. You see, to identify a chart pattern, you just need points where they touch multiple times. They touch, they go up and touch, they come down and touch, they go up and touch, they come down again and touch. So this is a big candle, but it's not a breakout candle, right? It's not a breakout candle. Okay, and then they keep playing and then they break out. Of course, this is not the biggest candle in this pattern. Yes, it broke up and went down, but we want to make sure we have high probability before execution. Okay, that's why we look for clean things. However, if you look at this pattern, let's see if it is a perfect pattern or not. In my recent video, I explained all these things, how you can identify a clean pattern or not. It must have 3 touches up and it must have 3 touches down. That's very important. Okay, that's very important. Okay, that's very important. So let's see. One touch, you can see they went up and touched. One touch, there's another touch with a pin. Okay, it is a touch. Prices did go there. Okay, prices did go there. And then from this point here, they came down again with another pin. You can see this is the second touch now. Okay, this is the second touch. They went up, they came down, they went up. Okay, because remember, there are people who went up on these 2 candles. Why? Big candle and followed by another big green candle. Remember, pins don't just become pins. They start as huge candles. Okay, they start as huge candles. Okay, so they don't just become pins. So these candles actually send people into the wrong direction, okay? So they went up and touched. So we have 2 touches down, okay? As long as they came down to the other extreme and touched and went up, it's a touch. And then they came again and touched. So we have 2 touches above. They came down and touched 3 touches. They must have at least 3 touches. They went up. Okay, I'm not gonna count this, but usually it actually went beyond the the halfway part. Okay, but I'm not gonna count it. Okay. And I'm not gonna count if I don't count this one. Obviously, I'm not gonna count this one. Okay, why? Because they didn't go up. So they went up for the 3rd time, and down we already had 1, 2, 3. But mostly, even if the 3rd touch is a breakout, we count it. You see, and they gave a beautiful big candle. You see, I've explained these things, guys. They happen every time if you are patient. And I told you, we are waiting for moves that explode immediately. We are not waiting for things that are still trapping. Some people don't understand why these things happen. Okay, it's about the psychology. I'll explain this in another one. Okay, it's about the psychology of the pattern. This is actually where they gather orders. You know that intraday is about manipulation. Okay, and long-term trading is about like fundamentals. Okay, but intraday is moved by market makers. Yes, I know people will say it's about how many people are buying, how many people are selling. Remember, they show you these things. They are showing you a move going up, bounces, goes up again. They are showing you these things intentionally. Now let's bring the 20 moving average. Okay, 20 moving average. Okay, we need a 20 moving average to confirm this move. Okay, we want to take a trade that is in line with the moving average. If it's going down, it must be inside. If it's going up, it must be above. Okay, if it's going down, it must be below. So that's what we are actually looking for. Okay, that's what we are looking for. As you can see, this is a big breakout candle. Let's go back there. Let's go back. Okay, let's go back. I have explained these things, and guys, this is what I used in my recent video. And if you go, this is another video I made another day. You see, it's the same things I've been explaining. If you just watch my recent videos, you're gonna see all these things where I explained everything, the times. I have explained almost everything. Okay, I've been explaining these things for a while. Okay, and it's the same thing every time I record. Okay, because it's the same thing that happens every time. So now, okay, let's look at what we have. Okay, we didn't see who was trapped. Okay, yes, we can continue without that. And in my recent video, I also explained the importance of this. So I'm not gonna keep repeating the same thing over and over again. That's why I say subscribe. If you haven't subscribed, you are gonna miss some of the things, and by the time you come here, you will think like I'm explaining half of the things, but I had already done in multiple videos. Okay, yes, the session has opened and we had news and we waited for the news to trade. Yes, we had a chart pattern which was a triangle. Again, I keep explaining 90% of my executions are triangles. Yes, we had a chart pattern. Okay, and then yes, we had an evidence candle. It's the biggest candle that breaks out of the pattern. How big is it supposed to be? It must be the biggest from the last touch. It must be the biggest from the last touch. Okay, I'm going to go to the charts and show you. Actually, let me show you before we even go. You see, we count from here. It must be the biggest candle from this point here to where the breakout is. As you can see here, it is indeed the biggest candle. It is indeed the biggest candle. Okay, it's the biggest candle. If you measure it in size, it's roughly 20 something pips. Okay, it's 21 pips and our maximum is 25. So still you can put your stops here. It's okay. Okay, acceptable. Okay, so yes, now you understand how the pattern should be and what is an evidence candle. You understand that very well. I've explained that also in my recent video, okay, which is in the description. And it needs to happen at the correct time. It needs to happen at the correct time. In my recent video, I actually used a checkbox. You can actually get it if you send me an email. I have my email in the description of my video. Okay, I will send it to you for free. Okay, look at this. Look at this. It must be at the right times. And I did explain what I mean by times. Okay, I did explain. Now you understand everything about the times, right? Let's go back. Okay, what time is this? What time is this? This happened at, oh my god, I love this. Wow, 16:30. My broker's behind in 2 hours. Okay, this was 18:30 exactly. What did I tell you? the same thing I tell you in all the videos. I did not draw this today. I actually use this in my recent videos. Just go back my recent videos, you will see these things, okay? And when I actually drew them and when I actually colored them, okay? It must be as close as possible to the half hour mark, or it must be as close as possible to the hourly mark. Now let's go back. It's happening exactly at 16:30. Exactly at 16:30. This is how you know that they are gonna explode. This is how you know that they are gonna explode. Guys, this is how you know they are gonna explode. And there is something most people actually struggle with, and it's this. I told you in my following videos we're gonna be looking at how to scale in, okay? Look, you enter, they retest. By a retest, they go back into your stops. You see, you entered here, and when they came back, you were at a loss, and then they collapsed, okay? If they give you such an opportunity, the moment they surpass your first entry, you can take it again, add another position. So your entry was here. So anywhere from here where they surpass this after retesting, you can add another entry, okay? And now your stops are maximum 25, minimum 15. We don't go below 15, okay? So you see your stops are here, and when you enter into another position, you bring your stops to the recent swing low, okay? We understand that this is a move that's ready to explode, okay? If you were wrong, they were gonna close you right immediately, because sometimes they'll give a fake breakout, okay? So if you are wrong, you are gonna get closed immediately. So now you are in two positions, okay? There's another important thing that I explained in my recent video. How long does it take? Oh God, I love this. It took more than an hour. And I told you, if it takes more than an hour to build a pattern, you can target 100 pips or 100 points. That's what I explained in my recent video. Okay? I've explained all these things. All these things, okay? You can target more than 100 pips. So you are in two positions, and each position targets its own 100 pips. Why? Because they pull back and the entries are not far from each other. If the pullback was here, obviously you don't take it, okay? You don't enter again, okay? Let's see how many they went. Okay, 100 was hit in 22 minutes. And I always want my target to be hit on the first move down, because most likely they are gonna pull back before they continue. Okay, but I want my my targets to be hit on the first move down. Hence why we don't just target; we use this to target. Okay, you can see now. It's over an hour, 60 minutes. Okay, I actually used the checkbox in my recent video for all of these things. Now you are in two positions. Let's say if you took the second one here. You see, all of them actually went to 100 pips. You see, it went to 100 on the first push down. So you got your 200 pips. I always say it's not about the size of the move. It's about the quality. You see, all the criteria were lined up here and met. Okay, they were met fully. Okay, I also talk about this. If they engulf this is the closing price of the previous day. Okay, this is the closing price of the previous day. See, this is where prices closed the previous day, because this is a day separator. This is, okay, as you can see, this is the second, this is the third. They are separated by this line. So this is where the prices closed. So they came back to this level, and if they engulf away from this level, or if they engulf this level, this is what I call my A+ setup. Okay, this is a kind of a trade where I'm willing to take a bigger lot size. Okay, so this is my A+. Okay, this is what I call my A+. Why? Because they are coming from the level and they've engulfed away from it. Guys, what's so difficult with these things? Patience. Just sit and observe. I told you, I'm not gonna get married to any indices. I'm gonna take the easiest one, and this one gave the easiest one because of the breakout candle. Yes, again, this one, the head and shoulder, wasn't that clean for me, and this one, the evidence candle, was lagging. I didn't get an evidence candle here because, as you can see, this is a big candle which was still inside of the pattern. Yes, the EMA actually was good here, but again, I didn't get that big candle. So I got it here, hence I took this one. Okay, so it's all about patience. I told you, most people say trading is difficult, but it's only difficult if you don't know what you are looking for. I gave you all the steps. If none of these criteria are met, then you do nothing. It's a day where you didn't get anything. Okay, and if you didn't get anything, you don't force anything because you don't have an opportunity. You only take when you have an opportunity, because I've seen many times people taking things and then they're losing, they're blaming the strategy without asking themselves, did I take a good trade or not? Because that's the goal each and every day, one good execution. Okay, go and journal it. Okay, if you took a bad one, journal it. It's gonna help you improve. Okay, if you took a bad one, journal it. Ask yourself, did I take a good one? Yes, sometimes it's going to be a good one with evidence candles and everything, and they might give a fake breakout. Okay, that happens, but the frequency is low. Hence, this one has a high win rate. Okay, and sometimes you're going to win so big, even the risk reward is too good, because the minimum we are willing to go is 1:2. Okay, minimum, we don't go below this. So that tells you, if the stop loss is above 25 pips, you don't put it there. Okay, if the candle is too big, maybe 40 pips, don't take it. Okay, or wait for a retracement. But most likely, if the candle is 40-50 pips, that move has already gone your 50 pips. Okay, so it's no longer a good one. Okay, so guys, I believe you understand this. Okay, so I'm gonna go back to the charts and try to help those who don't like indices, because they are explosive. Guys. I love this. The right time each and every day, it's the same things. This one is an inverted triangle. Had they given a big candle, it was going to be a perfect one, but they didn't. Okay, so now let's go to a currency. I want to show you something. Okay, this is GJ, right? This is USD JPY. The yen is moving like an index these days. Okay, almost every day it goes 100 pips. So the yen is too explosive. Okay, these days. So I want to show you something on this one. Yes, patterns do work on indices. Okay, however, I'm gonna say a very big however. You must use a bigger time frame. Okay, you must use a bigger time frame. Let me bring the moving average here, because it's important. You must use a bigger time frame. Okay, you must use a bigger time frame. If you look, I took this trade. Yes. Okay, where was it? I took this trade somewhere here. Okay, because I saw a beautiful pattern that was actually building up. Okay, wait a minute. I'll show you where I took this trade. Okay, because I actually took it on a smaller time frame. Yes, perfect. I told you I love the bodies. So they touch with the body and they touch with the pin, and these ones are just pins. Okay, so I'm not gonna put my line here. Yes, prices went down, but they are pins, and you can see this is the line where they came and touched numerous times. Okay, they came and touched numerous times. Wait a minute. Okay, I saw this pattern building up. Wait a minute. Okay. Yes, I saw this pattern building up. Yes, and then yes. It is actually a pattern I took. Wait a minute. Okay. Yes. Actually, I saw this is where I took it. Okay, I took it. Okay, it was not yesterday, a day before yesterday. Yes, I saw this pattern here building up. Okay, I saw it building up where they touched, they went and touched, they came and touched, and they went. Yes, because this touch for me had 3. Okay, remember, I want a pattern to have 3 touches. This is the first touch. Okay, this is the first touch down, this is the first touch up, and they came down for the second touch, and they went up for a second touch, and they came down again for a third touch. If you watch my recent video, I explained this. As long as they go halfway from here, they gave all the effort to coming down. Okay, I took this one when it broke out. This candle was the biggest candle from this pattern. Okay, but I actually took it on a 15-minute chart. But again, it was governed by the 1 hour. I waited for the pattern on the 1 hour time frame. Okay, I waited for the pattern on the I took it on a 5 minutes, if I'm not mistaken. On a 5 minutes. I waited for the pattern to actually be built out on a 1 hour time frame, and only when it broke out I came to a 5 minutes. Yes, you see this breakout candle. Yes, they broke out here, but this wasn't the biggest candle as compared to here. Okay, and this one was the biggest candle from the last leg, as I'm showing you, or from this leg overall. It was the biggest candle, so I took it from here. Okay, I took it from here. Yes, they were news during the day, but I got this pattern early and I took it on this candle here. And then you see they came retest and give you another bigger engulfing candle, which is another opportunity. I told you most people see retest as threats. Yes, they came and retested. Okay, and I always say if they retest, most likely they're not going to close you. Okay, 15 to 25. 15 to 25 currencies, you can have 15 pips, but it's 15 to 25. This is 25. It's where it's at the recent swing low. It's at the recent swing low. Okay, and then they give you another big candle. Okay, this is another opportunity. And then actually my target was if you reach Abaka, he talks about targeting this distance. Okay, targeting this distance. Most likely it's gonna go once or twice. Okay, once or twice. So let's see, this is the first target, the same distance, and this is target number 2. Okay, target number 2. So this was my overall target. Okay, it was just this distance. Okay, but if you don't want to use something like this, wait a minute, if you don't want to use something like this, like lines like this, you can use the Fibonacci tool. Okay, you can just, okay, yes, there's some settings. Let's tweak them together. Okay, this is a yellow. We're gonna change it to blue, and I want a thick blue line. Okay, I want a thick blue line. Okay, and the first one is gonna be 0 is to 0 0. Okay, 0 to 0 0. Okay, and this one is gonna be 0.5. Put 0.5, and this one is gonna be wait a minute. Yes, this is gonna be 0.5, and this is gonna be 50. Okay, and the third one is gonna be 1, and this is gonna be 100. Okay, this simply means one expansion must be at least the same size, 100% of this size. Okay, the first expansion is 100% this size, and then we're gonna go to number 2. We put 2. The second expansion must be 2 times this size. Okay, which is now 200. Okay, and then the third expansion must be 3 times. Okay, 3 times, which can be now 300. Okay, why? Because it's this 300% of this, and then the rest you can just delete. Okay, so now you have this tool. Press OK. You see now we have a beautiful Fibonacci. If I put it from the pattern, okay, up and down, it's gonna give you the same kind of thing. So this was my overall target. Okay, first target here. Okay, and then a second target. Okay, if you are using a magic key, you can manage this very well. If you don't have a magic key, it's up to you. You can target here or you can target here. And actually it ended up going another expansion. So this is in Shabaka's book. If you read Shabaka's book or most of the books about technical analysis, it could be Peter Brandet's book or any other book about this thing about technical analysis. It could be like Edward McGee. Okay, you can read that one. You see, it's just an expansion. It's just an expansion of the same size. Okay, just an expansion of the same size. Unfortunately here I didn't put it here. If I put it here, you'll see same size and then same size again. You see, this is how I actually took this. But usually I don't take currencies. I only take them when they build up on a 1 hour time frame, and mostly the pattern will take roughly 2 or 3 days to build up. As you can see, this pattern started here, and then they gave the whole day of just building the pattern, and then on the third day, that's when they broke out. So on a currency, obviously you need something that's gonna obviously take a couple of days to build out. Okay, a couple of days to build out. And these are explosive things, guys. These are explosive things. Okay, these are explosive moves. You need moves that are ready to explode. Go back and backtest this. Okay, go back and backtest. In my description, I've given you free backtesting tools. Just install them and go back in history 2, 3, 5 years, 10 years and backtest these things, okay, you will see how they happen. On currencies, at least you need patterns that take days to build out, okay. You're not going to get them every time as in on indices, but when you do, they are really gonna be good. And as I say, 90% of my executions are based on triangles. Okay, let's look at gold. Let's look at gold. Okay, let's look at gold. Okay, I took gold this morning. Okay, I took gold this morning during the Asian session. Okay, because I was awake, I was actually reading, and I saw this. I actually saw this from. I saw this pattern building out yesterday. Okay, I saw this pattern. I don't usually take these things, but if the pattern is too good, I'm gonna take it, guys. This is the same pattern we got from the yen. Okay, it's the same pattern we got from the yen. Yesterday it broke out. Yes, it was the biggest candle. However, this candle took 100 and something, so you're not gonna gamble on this one, because if you lose, it will blow your account. Okay, you don't want that. Okay, we need good candles. Okay, yesterday they broke out. I saw it and I did nothing. Okay, and then I actually went to a smaller time frame to observe it. Let's look if this pattern is perfect. Okay, they went up, came in touch with pins here. First touch, obviously second touch, and then obviously they came down halfway. I told you, if they exceed the halfway mark, I'm gonna count this as a touch. Okay, I'm gonna count this as a touch. So literally they did touch here and they went up again, and they actually, sorry guys, they actually did what? They actually touched again and they came down again. Okay, and they came down again and they came down. Yeah, but again they went up, touched, and they again came down here. So we had multiple touches, guys. Honestly, we had multiple touches, because we can still count even this one. As long as they go, they come, they go, they come, they go, they come. Remember, there are many people and activities happening in here. There are people who can't simply sit on their hands. There are people who always have to be in a position. There are people who always have to have an open position. And that's where all the problems comes in. And that's where our advantage comes in. Okay, so I saw this one. Yesterday it broke out with a big candle. So what did I have to do? I actually had to be patient, because I saw this. Yes, I even saw this one, guys. I saw all of these things happening. You see, it's still 60 pips. Our maximum stops are 25 pips. So you just wait. You're not going to take this candle. You wait. And today, early in the morning, I actually saw this here. You see, I saw this pattern here. So if you read Shabaka's book, this is where he talks about patterns within patterns. This is where he talks about patterns within patterns. Okay, this is where he talks about patterns within patterns. Patterns within patterns. Okay, so I saw this one. Okay, they went down. Halfway is here. They went down, touched up. Okay, came down again. But I'm using this part here because of the bodies here. Okay, I want to include more touches. Even if you pull it back, you can still see this was a very important level where they kept on bouncing on this level. Okay, so this is a very key level. Okay, a very important key level. You see, they bounce, they bounce, they bounce, they bounce. So you can see this line is very important. Okay, it has played a significant role, and it is still part of this pattern. Okay, and let's see, I saw it during the Asian session. They broke out on a 5-minute chart. That's where I took my trade. Okay, and then let's see, 25 pips, 25 pips, 25 pips, 25 pips from here. You see, 25 pips from here. It's still in Asian session. That's why gold is good during the Asian session, because it's less volatile and it gives good opportunities as well. You see what I'm talking about. This is where 25 is. So again, 15 to 25 qualifies. And then what do? They come and retest, and they give you another big candle. Okay, another big candle. Okay, is this candle the biggest one from the biggest breakout candle? Obviously yes. Okay, obviously this candle is the biggest from this leg here. You see, the same principles apply. The same principles apply. I think this video is getting too long and I'm almost done. Okay, just bear with me, I'm done. Okay, you see, even the EMA agrees with us. Okay, they touched, they came here and touched. Okay, they came here and touched. I mean, this is a big candle. They are already inside the EMA. They come and touch it, they go up again. But look at the sizes of this candle. This is another opportunity to scale in after an hour. But if you are not on the charts, obviously one position was more than enough. Now let's do the targeting. Okay, they are back now. They are back. Makes a lot of sense. And they are not just back. They are back with a head and shoulder. Shoulder, head, shoulder. But this is a smaller one. You see, they gave this pattern within patterns. Okay, so for this one, yes, you have to be careful on your expansion. Okay, you have to be careful in expansion. You see, they came and hit one expansion. Today we have non-farm. You can't be crazily targeting this big move, because we have non-farm, and non-farm can come and just disturb everything. Okay, but again, if this is the one I took it to 100 pips, because I know we have non-farm, so that even if I'm not on the screen, I know my target is still gonna get hit. Okay, I know my target is gonna get hit. Okay, so I took it to 100 pips. Yes, because 100 was actually close to the expansion. Okay, but if it's 100, 108, I'm gonna take the round number. Okay, so I took 100 pips here, and even the second one went to 100 pips, but I was no longer on the screen for the second one. Okay, because I take and close. Okay, so you see, patterns work, patterns work, patterns work. I've shown you countless patterns on gold and on other currencies. Preferably I love the yen, because it's more volatile. Okay, so you can see on the other ones you can get beautiful patterns. This move can still go up and up and up, with a high possibility of actually giving this expansion over here. Okay, it has the highest possibilities of giving this expansion, which is above 300 and something, and maybe in the long run they can go up, but again, they can still do whatever they want, because we have non-farm and we can't predict this news. They can still go 500 and something. Okay, they can still go that far. Okay, but for me, I'm not sure if they're gonna go up, because there's a possibility for jobs to pick up today, as the ADP actually showed. But again, this move can still go up. But all I'm trying to show you is the patterns. The patterns work, and they work, and they work. Okay, I've showed you countless trades I've taken on gold as well, which take days to build out. If you get a pattern that takes days to build out, that pattern is mostly reliable. If today wasn't Friday, I was gonna take this expansion. Okay, I was gonna actually take this expansion, probably first target, second target. Okay, but today we had non-farm. Okay, that's still possible. It might still go that far. Okay, it might still go that far. So guys, I think I showed you a lot of things. So if you don't like indices, I showed you currencies. On currencies, use patterns that take an hour to, or that build up on an hourly time frame, and mostly they are gonna be over days. Okay, most of them are gonna be over 3 days. Most of them are gonna be over 3 days. Okay, so that way you will get the best. That way you will get the best. Okay guys, I believe you understand. I believe you saw these things, and I believe by now everything makes a lot of sense. Okay, only take opportunities when you have them. You see, even on an hour, if you're willing to take it on an hour, you can take it, although your stop losses are gonna be a little bigger. Okay, so it's roughly 30, but again, 30 on a pair that has yen is mostly equivalent to 25, because you know, like the distributions in terms of pip value, it's low on the yen. Okay, but this is a move that's exploding. Okay, take patterns that take days to build out. I can still show you multiple ones, but I have a lot on my videos. Okay, so if indices don't work for you, you can take currencies. I only take currencies when I have patterns that take roughly 3 days to build out. They build out on a 1 hour time frame, and that's when I just wait. I wait for the breakout. Okay, I wait heavily for the breakout. So guys, I believe this made a lot of sense, and I thank you.